Hey guys, I'm here in Hallandale Beach, Florida with Boris from Gelfand Realty, specializing...
You're sitting on the beach,
yeah,
right?
pretty much sitting on the beach here. As you guys may know, Boris specializes in luxury real estate, a boutique firm that offers not only buying and selling, but also concierge services. Boris, I think you offer management, Airbnb. I even saw you do airport pickups, boat charter. So yeah, one-stop shop when you're coming to South Florida, whether it's Miami or Boca or Delray. Boris,
We started to work in the West Coast, Florida already.
Oh wow, okay, I did not know that.
Nice.
So that's awesome. So even if you're going to Naples or if you're going to
Northport or Charlotte, we're working Port Charlotte, Cape Coral. We started to service other side of the Florida too.
Awesome. Yeah. So Boris has a unique approach towards buying or selling. Everyone is their own specific client, and that's why it's a boutique service. It's not a franchise approach. So please welcome Boris Gelfand from Gelfand Realty.
Thank you, Marat.
Thanks, Boris.
Thank you. Okay, so let's talk about a couple different scenarios and let's go. And guys, I would love you to put notes, and if you have any comments regarding your specific scenario, which is you have, make comments and Marat will reply to all of your questions. And I think it's going to be good education how to start process of the purchase and what is need to be started from. So let's go with the first-time buyers. I know a lot of people that dream about house, have renting property for 5-7 years. They didn't buy in the right time. Now I think it's a good time to buy.
So I think owning real estate is one of the biggest wealth builders in the U.S. 80% of the current millionaires in the country derive their wealth from real estate. So it starts with your first home. And we have a couple of options in the state of Florida. We have Hometown Heroes, which is a Florida-specific program that gives you up to 5% of your purchase price with a max of $35,000 for the purchase of your home. You do have to document income in order to qualify.
It's full doc, right?
Full doc, yeah, or what we call in the industry full doc. So you have to work for a company that is a Florida-based company. That is important. It works with any type of financing. So conventional, meaning just regular conventional financing, FHA, VA, and USDA. So all four types are covered.
Do you need to return this money, or it's going to be
this is gifted from the state of Florida.
Okay, any specific requirements for income? Who's qualified for those programs?
So the minimum credit score is 620. It used to be only for heroes, right? First responders. But in the last 8 months, the governor has opened it up to any Florida resident who works in the state of Florida, minimum 40 hours a week, and works for a Florida-based company. So it's pretty wide open.
Purchase price could be 700 to 700,000. Okay. It's going to be 7 multiplied. So you can purchase property up to 700K, and you can get 5%, $35,000 credit. Gifted. It can go to
doesn't matter, down payment or closing cost.
Sweet.
Yeah, it's a great program, and that is only specific to Florida.
Like how much down payment you have to purchase this property?
3% usually, minimum of 3%.
It's private house, so it could be
single family is 3%, Condo, you're going to be looking for, I mean, if it's an FHA approved condo, which is very limited, it can
Let's
be
say with a standard kind of loan.
standard condo 5%,
5%.
provided the HOA allows it.
Yeah, I'm getting a lot of questions regarding does association have resorts, doesn't have resorts. Is it gambling between condos or it's
So what I recommend is if you once you get pre-approved, you pre-approved as the borrower, right? We reviewed your income, your credit, your assets, and we've issued a pre-approval, and you are looking for a condo before you go out, and if you have a limited down payment, only 5%, let's look at the condo, right? Let's see if it's already been pre-approved with Fannie Mae.
You can check it online, right?
Check it online. It's very easy for me to
just
check
need
it.
to give a name and that's it.
Just the name and the address. I'll check it with you same day. I'm a lender, so I have access to the Fannie Mae portal or Freddie Mac portal, HUD portal, which is FHA, and we can check it right away. If for whatever reason we need what's known as a condo questionnaire, a more detailed review, we can use the limited review program, and in that situation, you have to put 10% down.
Yeah, but this is you can get if you under contract. Then
this is the next
you need
step.
to pay money for.
Yeah,
no, because I'm getting as listing agent a lot of calls for some units. Again, every condo has now like partial reserves, or like I would just started to collect reserves from.
Insurance is a big thing. Also, what I usually do is I check to see if there's been conventional closings in the condo, right? So it's public record. You can see what type of loan someone got. And if there are conventional closings, it's a good chance that we can close conventional. FHA is really not going to happen.
And it's expensive loan, right?
It's more expensive also.
So basically, you advise to go with the 10% minimum at least?
Yes.
And closing, how much you think they have to have closing cost?
You should have about 5 to 7% of the loan amount in closing costs. Now, again, the $35,000 will get credit to that, but which is almost all of it. Yeah. So you need to have some money for the purchase of the condo, 10%, but the closing costs will get covered.
And what the income should be for those type of borrow?
So there are no income restrictions up to, I think in Dade and Broward County, up to $100,000 for the family you qualify, which is the median income for Broward.
Guys, if you have exactly what Marat said, I mean, you can always ask me. I will connect you with the Marat, and you're gonna get exactly if you qualified for this gift, right? It's really a gift.
Yeah, it's really a gift. So don't get too hung up on the details. It's best to try to get
H1 is scenario.
Everyone's
you want to review.
Yeah. And then we have a federal program. So this is called the Chenoa grant. This is a federal grant, and it allows you to get up to 3.5% towards your down payment.
Okay.
And 1.5% towards closing costs. This is basically designed for an FHA loan.
Mm-hmm.
This scenario is a little different. It's not a gift. You do have to repay it as a second mortgage. So you do have to.
And what is interest going to be on this?
It's going to be 2% above the current FHA rate. So in today's world, you're talking about 8%. But it's not bad in second lien position, considering that today's prime rate is 8.75.
8.7.
So this is below prime, and this is still a great
But it's
deal.
moving up and down.
It moves up and down.
It doesn't. Yeah. Okay. So, but we're waiting. It's going to be better, right?
Suppose.
Hopefully.
That's what they say. Yeah.
Okay. I have a lot of people who has no income verification.
Yeah.
What you can say about, people who work for themselves, people who has businesses and, like cash businesses.
Yeah.
How we can help them?
So we have, again, two options here. Option one, if this is a situation where we are able to provide some sort of income verification, and sometimes, again, we talk about getting pre-approved. We talk about getting prepared, especially in the beginning of the year when taxes are not filed. Let's discuss your options before you file your tax returns. But let's say if taxes are not an option and you have to go with a true no income verification loan, we have several options for you. We can use your bank statements.
Mm-hmm.
So we can review 12 or 24 months of bank statements, and we take an average of your deposits for income qualifications. And you have to put a minimum of 10% down in that situation for a primary residence purchase.
For primary, okay.
Yeah. And then if you can't use bank statements, they don't work, you get a letter from your CPA with a profit and loss that's certified by your CPA. In that situation, you need to put 20% down. These loans are usually reserved for people that do have better credit. So we're looking at 680 plus credit score for these types of loans. Obviously, they're more expensive because, as we said in the past, the riskier the loan, the less you're documenting, the higher your rate, the higher your payments are going to be. So, the cheapest loans, obviously, when you can document everything.
Okay, Marat, I have huge group of people, investors.
Okay.
What we can help them with, because rate is high, rent is a little bit went down. Still, I have a lot of people who are interested in investment. I mean, to invest money, to get loans. Previously it was positive income. Now it's a little bit, between zero to negative. Why? And why people purchasing properties? What's the reason, you think?
So if you are an investor, I think number one, the lack of availability of good property, sometimes you have to stretch. And what do I mean by stretch? Maybe you're going to come out with zero, right? At the end of the day, you're not going to generate any income. But you're looking at future appreciation, right? So based on historic averages, we've seen 5% appreciation since World War II, right? So over the last
So every year, 5 years plus.
Every year, 5% appreciation. Even including if you take in 2008 and 2009, after the crisis. You're still getting 5% appreciation.
But a lot of people are saying, Boris, why I need to buy property if I can put in a bank and it's going to be safe, I don't need to be involved. What are they going to lose?
Sure. Well, you're going to lose out on appreciation, right? The bank is paying you 5% now, but it wasn't paying you 5% in 2020. It wasn't paying you 5% in 2021. And most likely you're not going to get that in 2026 or 2027. So you need to take an approach, not just what's going to happen next year, right? But you need to take an approach over a 7 to 10 year outlook. And once the rates do drop, which is the likelihood the rates will drop, you can refinance. And then you're going to become more cash flow positive. But if the rates drop, and so the wisdom is that for every 1% in reduction in rate, we see 5 million more prospective buyers coming into the market.
Because they're looking for cheap money and want to be again line of the people. Because exactly. What I'm saying to my clients, for example, property 500, 520, and today we're purchasing the same property for 450, for 60. So basically what I'm saying, if you're going to pay it as today 500 extra, so which just comes to $6,000.
Yeah.
So, but still you bought for $50,000 less. Yeah, because absolutely. One market gonna be again growing up, is you're gonna be stand in a line to buy something, which has happened in 2021, 22.
Yeah, absolutely.
So, and always you said they can make refi, so now it's gonna be negative in a year. They can make it refi.
Positive.
It's gonna be positive, but they're gonna have property.
Exactly.
Does the payment include principal?
Principal, interest, taxes.
So basically, with the 1-2 years, they're gonna repay some principal by tenant.
Yeah, absolutely. And then listen, if you have some sort of a small loss initially, there's always tax benefits, right? So we can use depreciation, we can use marketing, cleaning fee, different expenses that a property can sustain to depreciate it and take tax advantage, right? And so write off some of that off your tax return.
So basically, this is one of the benefits. If you don't know making money, you can make deduction from your gross income.
Yeah, exactly.
And sometimes it's a huge amount.
Yeah, sometimes it could be a huge amount and could be a huge savings. And,
because I have a couple of clients, they're buying specific with a mortgage. They don't want to, they have cash, but they're buying with finance to use deductions, deduction for the, but for investment property, can you deduct interest?
No, interest is only deductible for primary residence, and I'm not a CPA, so check with your CPA on that. But as far as I know,
always, yes.
Yeah, the disclaimer. But as far as I know, investment property.
You don't want to eat somebody bread, right?
No, exactly.
Okay, because you can get problems. Guys, question, you know what? We're going to get scenario, which is we had recently, my client purchased property for $950. She took for $50 down payment and $500 was a mortgage. And she spent another $50,000 in repairs. Okay. So she got like cost of $1 million net cost of for investment, and she sold it $1.350, $1,350,000. Yeah. So basically, she did from 450K down payment, she did 350K profit. This is why people buy.
Yeah, absolutely. Listen, fix and flip's still very active, especially if you're in a market that has limited inventory, which most good markets have. Dade, Broward.
So it makes sense to take some liability and be in a game, not to say, oh, I didn't know, I didn't see it, why I didn't buy it. Because this is a scenario which is a lot of people who bought 21, 22 in the right way. This is what exactly happened.
Yeah, leverage. It's important.
And people took risk because nobody knew the market will go up and the market will go down. And we use this property for Airbnb. So during this time, she did 7-8% net.
Yeah, no, absolutely.
So basically, profit plus paid principal and interest was paid by Airbnb property. And so I think this person did 100% profit.
Yeah, listen, we've had a tremendous improvement in values over the last couple of years. So it's important to take risk, and it's important to calculate the risk and also have an outlook that's not just
and you have to have some money in a pillow, right? So in case something happened, you have to add not to fail with mortgage payments.
Absolutely,
it's important. And again, guys, investors, we have different properties which is Marat can calculate how much exactly it's going to be your payment. So and I will give you exactly how much you can rent it for without dreams, without rose glasses, and you're gonna get exactly how much HOA fees, how much taxes, and how much. It's some properties you can buy with a tenant. Is it easier to finance?
Yeah, no problem. It's sometimes even easier. So if you have a tenant in place and there's a long-term lease, or if the seller is using the property as Airbnb, as you mentioned, we can use the Airbnb payments as an income calculation.
And it's going to be the same rate, or it's going to be a little higher?
We can, if we're using Airbnb as the basis for the mortgage financing, the rate will be slightly higher. But because Fannie and Freddie, the two prevailing agencies for conventional loans, instituted a lot of adjustments for investment properties, the rate between a income verification loan and a no income verification loan for investment purposes, not primary, for investment, is very similar. Because, conventional financing, especially over the last couple of years, Fannie and Freddie wanted to reserve it for people owning their own home because there wasn't enough inventory. So they've made adjustments to make the rate higher. So the no-income verification loan is very similar. Very, very close.
I have type of clients who want to build their own house.
Yeah.
What do we have for them?
So we have
land and to build up.
Yeah. We have a construction to permanent loan on the conventional side, both jumbo and regular conventional financing. I do recommend for the most part that you purchase the land in cash, or if you're not purchasing the land in cash, that you find a project that already has approved plans and permits. And I say that because from a financing perspective, we don't want to hold that loan for too long, right? It's a bridge loan, it's temporary financing.
12 months, right?
12 months that we convert to permanent.
I think you cannot buy land and that you finish construction within 12 months.
Yeah, you can get extensions, but if you're buying land that doesn't have plans and permits, you're usually, especially in Dade, Broward.
And after purchasing of land, you're trying to find architect, you're trying to find GC.
You're going to lose 6 months minimum on just that.
And after 12 months, you have
you're going to have extension fees and all these things that you need to pay. So I recommend for construction to perm, if the project isn't sold with plans and permits, buy the land, get it permitted, get the plans, and then we'll provide you the funds to build, and we'll use the cost of land, so your equity, as the down payment for the construction loan, and you won't have to come out of pocket for any money.
But best safe scenario to buy land, to get approved, to find GC, to be ready to start to build. In this case, you're gonna get better to go with the bank and choose it.
Yeah, absolutely. If you're
in this case, with the 12 months, you can finish.
Yeah. Or sometimes, a lot of builders are selling the project. They'll build for you and they have the land and the project. Like, I've done multiple transactions. The builder doesn't want to take the responsibility of building the house, especially if they're custom homes. So they've owned the land. They've already gone through the approvals. Now they list the land and the project, and they will build for you. And in that situation, we can use construction and perm financing right away.
So builder who is owner of this land selling, and you're gonna just put escrow, right?
Yeah.
You're gonna just put deposit.
That's it.
How much deposit?
5%. As low as 5% for
So
conventional.
you're putting an escrow to the builder. He finishing the house.
We're financing it.
Builder.
Yeah, we're financing the builder. So it's like a regular
Very
transaction.
sweet. New and pre-construction. A lot of big builders, they build houses and they want 7-8 months to finish, or like condos which is we're selling in Miami. How much money you have to get a new condo in Miami area? For example, let's say $800,000.
Right. So most of the time, the builders are requiring 50% deposit, right, for new construction condos.
It's 10% reservation, 10% contract, so on. Basically 20% you need to put, let's say today, as soon as you're going to sign contract. Most of builders, they allowed you to put another 10% in a year,
Okay.
and another 10% when you come into your floor. So basically you have to have 40% in your pocket. What's going to happen in the rest of 60%?
We finance the rest of the 60%. It's pretty standard. Again, we divide that into two groups: people that can document income and people that cannot. And both ways we can provide financing. If you cannot document your income and your credit scores are there, it's just going to be a little more expensive. But you have to get prepared either way. If you're looking for financing, let's go through the pre-approval process. Let's check credit, let's check income, and let's decide which loan fits you.
With the 2-3 years, I think you can build everything what should be
Absolutely
closing, ready to close.
Yeah, if you're not ready today, you have 2 years to get prepared. So we'll give you a roadmap to be mortgage ready when time comes for closing.
So guys, who has some, let's say, $200,000-$300,000 in cash, and you see you cannot find anything which is suitable to you, so basically what I'm advising you to go with the pre-construction, new construction, to put this money as down payment, and balance of 60%, you can close when that's done. When you're gonna get keys, certificate of occupancy. I think this is more safe thing to put if you cannot find anything as you want.
Yeah, absolutely.
And most of the time people making money from new construction.
Yeah, listen, you're buying today, but closing in 2 or 3 years. So if your rule appreciation holds true, you're gonna buy a property at 2-3 year ago prices.
Yeah, just sold property in Miami. I think I sold it 800 per square feet. Now worst location, 1,100 per square feet.
Right.
So the same construction, but it's already $200 more per square feet for the same type of properties.
Yeah, right. I mean, you know what they say, God doesn't make more land.
Yeah, you're right. Okay, another case.
Yeah.
Airbnb property we spoke about.
Yeah.
So basically, people who want to be involved in this business, you can help them with because it's going to be a scenario with the proof of personal income, or it's going to be used income of property.
Absolutely. We can combine the Airbnb income plus your personal income to qualify you. And then if in the event that you don't have any personal income, we can use strictly the Airbnb income to qualify you. And again, in that situation, you're going to have to put a little more money down and the rate's going to be a little worse.
Let's say numbers.
20%.
So if you're buying property for $1 million, you need to put 200.
Correct.
Okay.
Well, we have a closing hopefully tomorrow. Same situation. They are putting 20% down on $1 million property, and we used a combination of Airbnb plus their bank statements.
Okay. And
the rate was not bad, in the sevens.
Today,
it's not so bad.
So if people are gonna make 12-15%, if they're gonna make self-management, they're gonna make 12-15% gross income.
Yeah.
So basically, they're gonna cover mortgage. They're gonna have some profit for themselves, and they can pay off.
Yeah, and they can stay there sometimes, right? The week or 2 weeks it's not rented, you can bring your family in basically for free.
Yeah, this is what Airbnb does.
Yeah.
Okay, regarding investor we spoke, regarding Airbnb, and regarding foreign national.
Yeah, for national, again, we had divided into 4 subcategories. So the first subcategory is whether or not it is a friendly U.S. company. right?
Mhm.
So if the country that the foreign national is coming from has
Let's talk Israel. Let's talk about Canada. Let's talk about
EU, any of the European
Europe
countries,
people. What they can, if they can buy something in US.
so they have to have a valid visa.
Okay.
And if the
Valid
loan
visa.
amount is
Okay.
over 350,000, we can use income documentation from their country of origin via like a CPA letter from their country of origin, and they receive very comparable financing to what a U.S. citizen gets. So you usually have to put, not the down payment, the rates. You usually have to put 20 to 30% down, depending on your situation and the type of property you're buying. And the rates are going to be market rates, very comparable to what a U.S. citizen gets.
And still they can refi. Rates a little bit higher.
Yeah.
So they can always
refi.
And you're going to use their personal income, which is
correct.
Those countries. It's clearly works as yours.
Yeah. And then if the loan amount is under 350,000, you just have to put 30 to 35% down. And then if it's a non-friendly country to the U.S., or the country's going through some sort of turmoil, economic, political, if they're at war, in that situation, you still have to have a valid visa, right? That you can't get around that. You have to be able to enter the U.S. But a case-by-case basis, we can finance those countries as well with 30 to 35% down.
Marat, can I ask you some straight questions?
Sure.
It's a little bit tricky questions.
Yes, I love it.
Why people need to use your services?
That's simple. Number one, obviously experience and the ability to prepare someone to purchase, right?
What do you mean preparing?
So we want to make sure that you're ready to purchase. We take pre-approval process very seriously. We call it being mortgage ready, right? And I provide that service. My team and I provide that service, something that usually the big banks, Chase, Wells, Citi, they don't provide. When you walk into Chase, your number is 1,552. You either qualify or you don't. We take a different approach. We make sure if you don't qualify today, you can be qualified maybe in 60 days, 90 days.
So you don't kill them from beginning?
Correct. We give you a roadmap to homeownership.
So basically you're preparing clients to make purchase in the best and cheapest way, right?
Absolutely. So that, I think, is number one. Number two is availability. Unlike many big banks, we're available, right? My team and I are here after hours. We're here on weekends. The listing agent can get a hold of us, and that sometimes is very important in a competitive environment. We reach out to the listing agent. We give him a buyer screen. We screen the buyer for them so they know what's going on. It's not just on paper. And then finally, price, right? So we are very
cost of the money, man.
Cost of money, right? Cost of money or closing cost. We're very competitive. My team and I are very competitive. I'm the owner, right? So I do have some flexibility, especially if they're one of your clients or one of the VIP clients, as we call them. We don't have huge overheads. We don't have offices in New York. We don't have offices in California. We don't have to pay for that vis-a-vis client fees. We have a matching beat policy.
Another question. We covered this. Okay. So guys, I think worth to make move in April, which is still market, not extremely hot, because again, it slowed down a little bit. So this is the best time to search properties. And again, rates, you're going to help us. And our team going to help you guys with searches, because to be honest, to find a right property will not take a week. Not 2 weeks, it can take months. Again, we have patience. We don't push clients just to any deal which is, we can find. We're trying to find exactly what you want for the right price. And unfortunately, exactly why we're using Marat, sometimes you have to have strong buyer qualification.
Yeah, I mean, backup to the buyer's qualification, because you have to get the listing agent to agree to accept your offer. It's important.
So basically, with Marat team, we're pushing everyone to make strongest possible offer to be accepted by listing agent, by the seller, because sometimes on the table for good property you have like 4 or 5 offers.
Absolutely.
And they're choosing who is stronger, not always higher, who is stronger. So in this case, Marat will help. We're gonna push the seller to accept your offer, and you're gonna choose the best possible properties on the market. Marat,
absolutely.
Thank you for coming. I think, guys, it was good education to you. And again, like I did ask, put your comments and Marat will reply to all your questions. And if you want to be connected, send me a text message. I will make you connected with Marat for pre-approvals and future purchase.
Awesome. Thanks so much, Boris.
Thank you, Marat.
Thank you.
Thank you.